Well, Zhang is president and chief economist at Pinpoint Asset Management.
It's a big number. The 10 trillion renminbi debt swap I think it will help the local governments a lot because they are under a lot of fiscal pressure, and this will give them plenty of room, fiscal room to increase spending going into next year. I think they anticipate next year will be a tough year for them.
So it's the first time since 2015 that China has raised its local government debt ceiling in the middle of the year. What does that tell you about the urgency of the current economic situation?
In the first half of this year, economic data continue to surprise on the downside. I think by now the government realized that they need to do something really meaningful in order to turn around the economy. Minor policy measures wouldn't do the trick. So I think this 10 trillion number, why they finally agreed to reach such a big number is to really do something decisively and particularly help the market to get more confidence. I think they realized that, 10 trillion, which is about, I would say, almost 10% of GDP, that kind of magnitude of fiscal operation can help to boost the confidence in the investment community.
So a big, bold step to boost confidence.
That's right.
And of course, the global context here with Donald Trump's re-election in the United States, fueling concern around the world, really, about tariffs. How important is it for China to strengthen its domestic demand at this time?
Yeah, I think China is probably working on plans to going into next year when the trade war really starts. I think probably going to be end of first quarter. That's probably when China will actually announce the fiscal measures. I think there will be a pretty big stimulus to be announced by them. This announcement we got today, this 10 trillion debt swap, is only the beginning of a series of policy actions from Chinese government. But right now, I mean, they have a long procedure, a process to come up with fiscal stimulus, and I think even if they already finished the plan, they probably will only announce it after the trade war is initiated by the U.S. side, which is probably Q1 next year.
Okay, so that's the micro picture. If we zoom out and think about how foreign investors could be viewing this move, what potential consequences could the debt swap have for foreign investment into China?
I think there's general consensus that the government now they are serious. They are taking action that are not just words, right? So these are 10 trillion renminbi that actually will be spent. And I think there's a high expectation for what's going to happen in the next few months as well, going into particularly first half of next year. So I think the sentiment changed a little bit. 3 months ago it was very negative, but now I think people still have doubt, but on the margin certainly improved, and some investors become more hopeful.